Hello, everyone, and welcome to today's webinar roundtable. My name is Mario Kiriakou, and I'm hosting today's session, and I'm pleased for everyone to join us today. So today's topic, digital evolution, how financial services are fighting back against the rise of fintech. So we've been looking forward to today's session for a while, and the idea behind today's topic is to explore how incumbent financial services organizations, whether you're a private bank, an asset manager, a bank, or an insurer, how you can leverage digital technology data to deliver an experience which is enabling your organization to stay relevant, to grow, and to deliver the type of experiences that your customers have come to expect from their partners and suppliers. I'm super pleased to be joined today by Sol Enenmoh. Sol is a digital transformation specialist. He has a broad experience working in financial services over the last 18 to 20 years. He's worked at a range of organizations, RBS, Lloyds, HSBC, Hastings Direct, and now he's currently working at Vanquis Bank as the in digital transformation. I'm also pleased to be joined by my erstwhile colleague, Steve Renshaw, who is the co-founder at Ratio FS, a digital experience consultancy working with a range of FS organizations around, how do you deliver a great customer experience using digital technologies. So let's go straight into today's session. So the first question I really wanted to explore, and I was thinking about this yesterday when I was just running through type of the research and background for today's topic. Digital transformation is a phrase which has been bandied around in financial services for many years, and in itself it can mean many different things. But also as an umbrella term, it's also changed as technology changes, as people's expectations changes. And then just want to bring you into this, Sol, is that from your perspective, working across a range of transformational projects over the last number of years, how have you seen digital transformation changing over, especially with the impact of COVID, accelerating the digitalization of services? Have you seen any sort of trends over the last couple of years and sort of changing things up?
Yeah, sure. Yeah, so Mario and Steve, thanks for having me. Good to see you again as ever. If you'd asked me about the time horizon, the changes of digital transformation over the last 10 years, I'd have said a couple of different things. So, 10 years ago, if I think back to being maybe at Lloyds Banking Group, you started to see the emergence of digital having a seat at the table, at the top table. So, you've got then the emergence of, say, the CDO role, the Chief Digital Officer role, being someone that reports directly to an MD or a CEO rather in a large organization, raised eyebrows initially, but actually started to enable meaningful conversations to happen at that top table to give permission for things to get done, which were beyond just digital equals IT. In the last 5 years, then, it's been very normalized for a digital sponsor to be at the top table. So whether that's a chief digital officer or a chief information officer or a CTO, or even in some cases a CMO, a chief marketing officer, and nuances aside, given those different functional responsibilities, the fact is you've had digital at that top table. But still, what we've seen in the last 5 years is digital still very much equating to IT, kit, and a few process changes in maybe operational areas and some channels such as contact center. What the pandemic has done is really crystallized for everyone across an organization that digital transformation equals business necessity. I'll give you a quick example. So I was doing some consulting work for a large Irish insurer about 2.5 years ago, and I had access to the C-suite, to that leadership layer, who were all very smart people, all very bought into the idea of digital transformation. But being candid, they saw it as just yet another initiative that they could kind of see being done over multiple years, 3 years, 5 years. And they didn't want to do anything too progressive. They didn't want to rock the boat. We are talking about a large organization with people with corner offices, PAs getting them tea on a regular basis, doing the sandwich run for them, and siloed functional areas, and people didn't want too much friction. If you didn't interrupt what I'm about, then I won't interrupt what you're about. So they were on side from a smart cookie perspective, but they weren't really bought into doing anything genuinely transformational because that would be too much upheaval. cut to pandemic, and I was speaking early pandemic to some colleagues who were still working with that particular organization, and they said to me that that particular organization, the leadership team, they were all properly now bought into it. They were like, now we get what those guys were peddling a couple of years ago. We get it because they've had a rude awakening. You had a leadership team in that organization who literally, when the pandemic started, even though they've told all their staff, well, you have to work from home, they themselves couldn't actually work from home because work for them had been coming to their corner office. So you've got very senior people, I kid you not, without laptops, or without, even if they've got laptops, they don't have, Zoom-based or other web-based technologies for them to be able to kind of continue to do work remotely. So they had a very rude awakening, let alone how they then solve for their contact center or some of their other channels, in terms of capacity, in terms of cloud movements, all of those other types of nuts and bolts things, because they hadn't really thought about a situation like this, because that wasn't part of their mindset. So digital transformation as business necessity is something that is permeating loads of organizations, and the ones that are not just surviving but thriving are the organizations that have been better placed to kind of mobilize teams, mobilize new ways of working, and actually crack on with what matters. At Vanquis specifically, last year, we managed to send home about 2,000 people in 3 days. And our operations director said at the time, he said, we must remember this time. Any debate about waterfall or agile methodologies aside, we've managed to kind of get stuff done very quickly. We've managed to stand up contact center so that agents can work remotely and answer calls for customers. We've managed to actually be able to stand up services so that people can actually continue to work. And we've actually started to focus on what really matters. There was no big committee to kind of say, should we do this? Should we do that? People just cracked on. The right people got engaged and moved things forward. But then what's happened since is that some organizations have kind of rested on their laurels. They've kind of said, this is a bit new. This is a bit different. I'm still here. I'm still alive. I've still got a job. And we can just now do this. But actually, we're going to go back to kind of what we did before. So we're going to stand up committees still. We're going to do all this other stuff. And in some organizations, as we've probably all seen, you can be back to back to back all day in meetings, and that becomes the work rather than actually doing meaningful stuff together. Versus other organizations have said, no, we're going to seize on the fact that we have genuine business agility, and we're going to go on from there. So the last thing I'll say is that we've seen in the last 5 years the growth at real pace and scale of organizations which generally didn't exist, especially in the FS space, and those becoming very successful organizations, even on a national international stage. So if we're talking about finance specifically, if you look at Monzo with 5 million customers, obviously they've had a couple of snags this last year or so, but that aside, to go from being established 5 or 6 years ago to having 5 million customers, that's just like a big wow. If you look at Starling, the same thing, who claim to be, I think, recruiting a new customer every 39 seconds. And so the practices that those companies exhibit as part of their DNA, they're practices that you're seeing lots of organizations, including in the incumbent space, try and kind of ape now those characteristics. And for me, that comes down to transitioning organization from having a certainty mindset. And again, we're in FS, so a lot of risk-based culture pervades, to actually a culture where actually you're looking at growth, and you've got to introduce new practices such as innovation as a capability, which I'll talk about a bit later, which will engender transformative success for an organization over time in a way that organizations still are struggling with how they balance that from a rigor perspective, from a regulatory perspective, etc.
Yeah, I kind of agree. Digital transformation is always more than just turning on the latest piece of marketing technology and getting IT to change a bunch of processes. Steve, it would be interesting to get your perspective on this as well.
Yeah, I think from my point of view, I look at transformation. I guess you could look at transformation from the point of view of, are we transforming a customer journey or a user experience or something like that. I also talk a lot about the difference between macro and micro transformation. So if you're looking at a big sort of data lake program in a bank, for example, you might call that a macro transformation program. And there's a huge number of stakeholders. It's fundamentally changing the way that data is stored and used within an organization. But I guess where we spend most of our time is more on the micro transformation. And I used to head up the customer success team for Sitecore back in 2012. And back then we were banging the drum about testing and personalization and all the great things it can do for you. And we're now, getting on for 10 years down the line, and we're still seeing that a lot of customers that we deal with or that we're sort of taking on board now have not got to the grips with even the basics of that. I think going back to what Sol was saying there, he mentioned team alignment. And I saw a report recently looking at the number of banks that have really got the team in place to support transformation on a micro transformation scale, by which I mean implementing customer journey optimization, personalization, testing, that stuff that a marketing team is ostensibly in control of. But having the team structure around that is still something that only about 30% of these banks have really got, but also the alignment between tech ops, marketing, business lines, and so on, that has a shared KPI structure, shared measurement framework, so that everyone's working towards the same thing. And that's a change we're seeing at the moment. But I still think there's a fundamental issue in a lot of these organizations where you walk in and they've got a website, they've got an email platform, they're doing batch and blast, there's not a lot of measurement going on, not a lot of attribution, and what that's leading to is a lack of knowledge within those teams as to what's possible, B, a lack of understanding of the data that supports it. So what activities are we going to do, why, and what impact or result do we want to see off the back of it? We could talk about maybe some of these examples later on as to who's doing that well, but it tends to be the organizations that have got that shared culture, the shared KPIs. And I think that's really, even over the last year, that's where we're seeing quite a shift in a lot of FS businesses, certainly, but also across the board.
One of the things I always find that fintechs do well is in raising the bar in terms of the type of customer experience they deliver to their customers. And part of, I suppose, incumbent financial services organizations, whether you're an insurer, a bank, or a private bank, is about delivering a great an experience as humanly possible for your end users, but trying to define what that experience is, or trying to define what a good customer experience is, can be quite difficult, because it can mean different things depending on the type of digital team, the marketing team you're talking to, different types of stakeholders, whether someone's in charge of a specific product. And it can become quite hard to define what is a good experience. So my question is, have you got a recommendation on, I suppose, how do you approach this? How do you go about defining what a good experience is? Because I think it can be it's easy to say, but actually very difficult to put down in writing.
Yeah, so I'll take this first, I guess, Steve. I'll be brief, and I was on the last one. Yeah, so for me, I mean, there's a bit about kind of being very pragmatic about this, and and I'll talk to this a bit later in terms of broader transformational techniques. But essentially, there's a bit about kind of doing some knowledge building or understanding first, because what is a good customer experience for your specific customer or customer cohort might be very different depending on what organization you're in. So for example, I'm currently at Vanquis. We've got a certain customer demographic in the round, thin file credit history, all the rest of it, which is, I would imagine, very different to, say, private banking. So there's something about that side. That said, there are some things now which everybody is broadly savvy on. Most people have a smartphone now. Most people have a high-end expectation of what a good retail experience looks like, and that drives a lot of the perception about what good could be. So we're talking about a frictionless experience. We're talking about some elements of personalization. We're talking about making journeys just journeys, so not even digital journeys, or this is, almost like they're just ubiquitous. It's just like, yeah, I can swipe, I can tap, there's the haptic feedback, there's all kind of immediacy relevant to the things that I want to do to make it, relevant, meaningful, quick and snappy, usually, if you're talking about, let's say, Apple or web-based channel experiences. I very quickly, want to just talk to, say, Amazon as an example. So if I look at an end-to-end happy path customer journey from acquiring a prospect, from someone maybe searching on a website like Google saying, I want a credit card, for example, through to them doing the application and transacting and being accepted and applying for that product, and then actually the servicing of them there after they've been onboarded, and then obviously the retention of them for that particular product, that FS product. I look at that journey and I think, well, today, a lot of FS entities, they use third-party comparison websites to, someone says, oh, I want insurance, they go to a money supermarket or go compare, and then they're kind of onboarded. And then obviously there's, depending on where you are, there's various clunky elements to kind of consume that customer and then obviously, service that customer, look after them, and then obviously try and retain them. And that's the battle that a lot of FS organizations are going through. Whereas if you compare it with Amazon, well, guess what? No one's Googling really on Amazon, right? They're just going straight to Amazon in the first place. You've got one-click transaction. You're served up a range of things that Mario or Steve or Sol might like, and then actually you just tap and go. And you trust implicitly that that item is going to be there. And if it's not, it's quite a low-fi quibble process to be able to kind of resolve that. So, and you're advocating for that. I'm mentioning on this call. So there's a ubiquity and seamlessness to the Amazon process or the Uber process, whether it be taxis or Uber Eats to get your food in, that still doesn't inherently exist in a lot of the FS sector. We're still kind of battling through. And so, that's something that ideally organizations should be mindful of, given the savvy nature of most customers now and their understanding of what is actually good in the outside world.
Yeah, I think just to add to that, again, something that we talk about quite a bit is the 11-star experience. If you've ever heard the Airbnb story about how everyone's looking for a 5-star experience, and that's almost what the customer expects. But what's an 11-star experience? In Airbnb's case, they try to dream up what's the ultimate experience. You book an apartment, it's pristine when you get there, it's overlooking a river, you've got a bicycle you can use outside, you've got tickets to a local concert left on the sideboard, and then trying to work back from there is to say, okay, what's actually achievable through digital channels? And the last year, I think, has shown that digital is more important than ever to service customers, especially people who are looking for money, for loans, but also just from support for their bank. And mobile is now the primary support channel, as Sol says. Making sure that you have the right customer experience, whether it's Twitter, whether it's chatbots, whether it's through the website, is really, really important, especially in the context of all these other apps and challenger brands, but also things that people have within their own lives that they expect the same experience from their own bank from. But I guess in terms of how you measure it, it's 3 things really, I guess. Success being one, so did the customer complete the task and achieve their goal, which regardless of channel. Effort, so was the process smooth and easy? An emotion, do they come away from that experience happy, feeling good? Are they going to recommend you? Are they going to come back, as Sol's saying, are they going to retain them as a customer? So there are metrics that you can measure, both through data analysis, but also through that more qualitative information. And that's quite important. Just to bring it back to an example, we were doing a project last year with a client, and we could see a huge drop-off on a particular page, and there was all sorts of theories going around as to why that might be, but there was no qualitative research going on to ask customers, actually, why have you dropped off? And this stuff has been around for years. This stuff sounds simple, but actually you have to, people sort of tend to fall into a bucket of just looking at the data and not looking at the qualitative customer feedback around that. And I think when we're looking at experience design, that's something that's really important, because you can see the numbers, but if you don't know what's going through the customer's head when they're going through that process, it's very difficult to understand why that action is taken, and that can lead to poor decisions in terms of redesigning that journey as well. So I would say that's probably, from my point of view, that's where the experience design bit is really important.
That makes sense. I mean, I recently had the opportunity to interview Richard James at Nationwide, and he talked about how the branch network for Nationwide is so important for them. It's a differentiator in the sense that they deliver a high level of experience. People who transact through the branch tend to stay longer and purchase different products. And he talked about the challenge of trying to replicate the type of experience and service they have within branch, via digital services. And there's a danger with the race to digitize your services that they can just be, when customers are comparing like for like between different suppliers, it can feel not bland, but it's hard to differentiate your unique offering as a business via digital channels at the moment, in terms of, what's core about your business. Why would someone bank with you or take out insurance with you, for example? And my question is, I want to phrase over to you, Sol, is well, 2 parts. How should brands, maintain the uniqueness of their offering as they transfer from, traditional offline services and complete digitize the offering? And how important is personalizing the overall experience to, I suppose, differentiating what they provide as a business versus, the next bank down the road?
Yeah, so yeah, great. So great question. I think understanding your business plays a very important, if not critical, role right now. So obviously, I've started this particular session calling out that digital transformation equals business necessity. I'll go further now and actually make another statement I've been saying since the middle of last year, that I think all successful companies now are data companies. And I think that in the financial services space, we are now moving to a situation with digitalization whereby all successful companies are going to be data companies that happen to sell financial products and services. So if you get a really strong handle on your data, then you can be on point with business agility and the right setup and the right permissions to be able to then work on what matters, because you're measuring what matters. You've got then the ability to mobilize around what's important. So today, for example, at Vanquis, we are over-indexed on credit lending products, credit cards, loans for a certain customer demographic. But given the broader range of society that have needed help during this time, given the government's intent to try and spend us out of recession with a lending for good type program over the next few years to accelerate recovery, then we're going to move to a situation where there's significant headroom for growth for that organization, including exploration of commitment to new products, maybe deposit products, etc. You know, ISA savings loans, ISA savings, etc. That they don't currently do in anger. So knowing your audience, knowing your customer base will then be a good starting point for you then to say, well, okay, what is meaningful for us if we are going to personalize? I see a lot of organizations more broadly toggling between the notion of having customer cohorts, building customer profiles, and you know, targeting with bits of sprinkling of personalization with a small p for those specific audiences, versus I see other organizations very aggressively saying, well, actually, we're going to try and double down, build a single customer view of our data, very externally facing. And then we're going to recognize that Steve, Mario, and Sol are all completely individual, and we're going after what we call the segment of one. And you know, I've seen organizations wrestling with where they want to be, but I think crucially there is a debate to be had about that as the first thing. I think if I think of last week, you know, there was that Santander drama, right? And my wife banks with Santander, so I was aware of it. She was out with me, and luckily it didn't affect her because I was with her, and I was like, yeah, bang, I can pay for X. But you know, you heard stories of people who were like, you know, there was one guy I heard about who was trying to buy a car. He was a million miles from home. He'd gone to buy a car of, we'd imagine, more than, you know, a few £1,000s. He couldn't do it. So it's inconvenienced people. And at that moment in time, for that few days, there's no one that can tell me that any of those people were clamoring for personalization. They just wanted a service that worked during that time, right? Personalization went out the window. You know, it was like, yeah, we just want the service to work. So there is something about understanding where it sits maybe in the hierarchy of things. I think that we're exploring at Vanquis, and you know, there'll be other organizations doing the same, knowing that you're a data company that happens to sell financial products and services. You're exploring different ways of actually engaging with your specific audience. So at Vanquis specifically, our customer cohort of just approximately 2 million customers are people who have had difficulty to date getting credit products elsewhere. So these aren't just quote unquote poor people. These are people who come from all demographics, high paid jobs, for example, but they might be thin file because you've moved after a decade abroad on 200 grand a year back to the UK, and your credit history is minimal here. You might be someone who's gone through an unforeseen life event like a divorce or bereavement or job loss, and that's led you to having limited access to credit than what you're used to from maybe tier 1 providers. So Vanquis understands some of that, but one of the things that I've witnessed while I've been here is that they, like many other large FSs, are still working in a very classic way in terms of how they assess someone's suitability for credit. So crudely, someone comes through, has to do an application. It's a traditional question set, which is linked into scoring by traditional large credit reference agencies. So this is linked to stuff like, is Sol on the electoral roll? Do you have a permanent job, etc. But guess what? 16% of our customer cohort currently are what I call self-employed or gig economy workers. So these are people who are hardworking people with multiple temporary but consistent jobs. You know, these are people who are, you know, electricians, other small trades, etc. and we've seen them need significant help and support during this time. And so there's some different nuances around how you would go about providing services to those people. So, you know, one of the things that we're exploring is changing up the question set, whereby at the moment someone's coming in to answer a question set in a very traditional way, whereas the argument would be, well, wouldn't it be cool if someone comes to you and they don't have to fill in potentially questions around electoral roll or you know, this, that, and the other, etc. But actually they're coming and filling in questions based on what they might need to do, and then you're going to serve them back relevant responses, judicious choices based on the things they want to do. So if anyone on this call is aware of Clayton Christensen, there's a great Google 4-minute video called The Job of a Milkshake. That really breaks down that actually when people want something or need something, the thing that they need it for is often different to the thing that might be assumed from a servicing perspective it's needed for. So when someone's applying for credit, they don't need a credit card. They need help to buy a sofa, or they need help to repair their car, or they need help to go on a holiday, etc., etc., etc. So if you can change up your decisioning process, then you're well within, you're well on the journey to actually servicing things properly. And we've seen very quickly changes in recent times. So Experian, so one of the large credit reference agencies, they brought out a product, I think late last year, called Boost, which essentially it boosts people's credit score by recognizing that, well, somebody might not be on electoral, for example, but actually we can see that you've subscribed to Netflix for the last 5 years and you're good for routine regular payments of $9.99 every month. That'll do. That's worth this many points. And especially if we think of, you know, transitional changes where you've got, you know, Gen Zers, optimistic spenders, the rent generation, they're not, the characteristics in the basket of things that they're interested in buying are very different to what the hierarchy of traditional established cohorts are. So you're going to have to see some, you're going to start to see some changes there in terms of what gets personalized, but also what kind of mechanisms they use to kind of support people in that process as well.
Really interesting. Steve, I know you have you come at it from a slightly different angle, but it's really interesting to hear about, you know, around the credit scoring and how do you the reference inside and how that influences the type of experience you give to people. But yeah, I agree. People just want most of the time just to be able to transact. There's nothing more annoying than that.
There's definitely an element of jobs to be done. So the user wants to come to the site, they want to get what they want to get done. And then there's the how far do you personalize. I'll talk quickly about differentiators, I guess, but especially with the deprecation of things like third-party cookies, where people were targeting with 10 different parameters, trying to target one particular audience segment. And you know, if you look into the research around third-party targeting, I mean, the accuracy of that is debatable. So 50% accuracy on 10 different parameters, you know, quickly ends up with a very small field of people you're trying to target. You're not actually sure that it's even worth targeting them in the first place. So I think definitely the idea of going back to cohorts, not doing micro, again, going back to the concept of micro and macro personalization, where someone has shown intent, they've given you some information, you know they want to go through a process with you. That's at the point where you can personalize, whether it's through continuing an application process, whether it's serving a relevant message on the website or through app next time they log on. And then there's also the macro personalization, which again, Sol was talking about in terms of cohorts, and that is getting much more broader brush and not being too specific about who you're targeting to and why. And again, we see this quite a bit where we're trying to target people who've gone to look at a certain type of account, and they come back next time, and of course the client's trying to serve them a message about that account. Actually, it turns out that they might be in the market for a premium account, but now we're sending down a rabbit hole where they're going back to the account they were looking at previously, and that's where that personalization experience differentiator, if you like, can go too far in one direction. The other thing I'll just quickly say about differentiators, I mean, you look at banks like DBS, they're trying to be quite proactive in terms of how they create a partnership ecosystem. So rather than being reactive to a customer need, so you know, I need a bank account, or now I'm at a point where I need a credit card, or now I need a mortgage, is actually trying to become more intrinsically valuable to those customers' lives. So by creating this partnership ecosystem, so you know, partnerships with, I don't know, with car manufacturers, or you know, whatever it might be that their clients would like to be in the market for. It's about, that's how those kind of more legacy banks are trying to do it. And also, again, going back to something that Sol said earlier about being data first, DBS now call themselves a technology company that happen to do banking, and this is just one of the strands of the things that they do, and that is underpinned by that foundation of data. And I think that's a really good example, along with people like Wells Fargo, where data is now at the center of everything they do, and that's a differentiator because that extrapolates out to customer experience, and that's why people will recommend you and they'll come back to you.
It's interesting what you just said about DBS consider themselves like a technology company, and I think the one commonality around any sort of effort to deliver a great experience for customers, from the customer's point of view, it's, you know, are they able to get the information they want at the right channel at the right time? But from the FS's perspective, it's about the delivery of that, and that obviously requires technology. So there's a challenge around, well, I suppose a debate about, do you focus on you know, buying in the right technology to deliver on these type of experiences, or do you look to build an element of this internally yourself? And I suppose that's a challenge, and I suppose pros and cons on both sides. I'll throw it over to you, Steve, as you did mention the DBS as technology company.
I'll keep it brief, but yes, I mean, if you look at the speed and change and the breadth of technology that's needed now to support your average, you know, if you want to call it a banking marketing team, if you think about the amount of investment that's gone into building just one of those elements of a technology stack, so a digital experience platform like Sitecore or Adobe, you know, the Sitecore, for example, has been going, I think, nearly 20 years now. Trying to rebuild something like that in-house, but then extrapolate that across a tech stack of 5, 6, 7, 8 different platforms is nearly impossible, not just to build, but also then to maintain and to iterate and to and so it goes on. And then also to have the skills built around that as well to use it all properly. Which is why I think we're still going to see a buy rather than a build culture. Core banking is probably the main place where we see build still being a priority. Some of the challenger banks like Revolut, they built most of the core banking platforms in-house, gives them more flexibility, they can roll stuff out quicker. But if you speak to, I spoke to a bank early April time, and they were saying that by the time they've actually got around to using some of the features of the latest release of the product that they upgraded to last year, a new release has come out, and you know, they're going further and further behind the roadmap as well. So there is a massive speed issue in terms of how people can adopt, how banks can adopt, or if its business can adopt that technology as quickly as possible. And I guess that comes back to the point around why are we using it, what for, and do we have the team aligned that can support it? I mean, so what's it like in your world?
Yeah, 100% echo everything you said there. I was nodding away and while I was on mute. So philosophically and strategically, I think buy over build has to be the way that you can continue to accelerate so that you can not just survive, but thrive in the next, you know, 1 to 3 years. I'm not one to think beyond that timeline because, like you said, there's so much change at pace during that time. What I'm seeing is lots of organizations as part of their transformation recognizing that actually our existing infrastructure is creaky at best. This is me being quite polite. and philosophically, if you go back a decade, which again is often a lot of these IT infrastructure environments, you've got people, processes, you know, tooling that isn't really match fit for directionally where you want to go. So, you know, if you were going to build your own stuff, well, why would you build your own CRM to what, you know, Steve's point was saying? You know, it just doesn't make sense. So actually, directionally where you're going, e.g. cloud, e.g. virtualization, e.g. microservices that plug into middleware and the adaptation, because no one knows beyond 18 months what the next iterations are going to be, but that gives you that flexibility. So yeah, that the partnerships, having that broader ecosystem, that directionally is something that organizations need to have that discussion up front. And a lot of organizations, surprisingly, in my experience, they're not even having that. They're just still saying, oh, well, we're almost going to treat these as one and done, CRM or CMS or, you know, whatever other application it might be or platform it might be. I'll go bolder again. I think increasingly that you're going to see thinner IT. You're going to see devolution into partnerships as part of a broader ecosystem. You're going to start to see main IT in large organizations as a commodity. And so the conversations become about right sizing, they become about, they involve HR, they become about power and control, because they undoubtedly start to be about yielding seizing control or desisting control of fiscals like budgets. You know, I used to have this much money for all of this stuff for kind of run and maintain, but actually that's going to transition away from me in some part. And you know, you're starting to see growth of exploration budgets. So later I might mention about innovation as a capability of time, but essentially, you know, the existing infrastructures that I've seen in the round, they don't have some of the structures in anger that you need to be able to thrive in a new ecosystem. So I'm thinking about if you're going to do proof of concepts across a range of things, like if you're going to spin up a new digital experience, I've seen and witnessed firsthand the pain of that over the last 5-7 years in lots of organizations where literally, I kid you not, they haven't had their own sandpit, for example, to be able to kind of play around. You know, it's been an effort to kind of spin up a separate environment just for that, you know, which has involved a lot of unnecessary pain. So yeah, we're going to, I think, move to IT as a commodity, thinner IT, devolved relationships, partner ecosystem, etc., which will, you know, help organizations remain relevant in the years to come.
That's interesting. I think if we're comparing fintechs with, you know, incumbent FS organizations, I think one area that fintechs stand out and have an inherent advantage is around designing an experience around a single channel, which tends to be you know, a mobile app. And therefore, all their efforts can go into making sure that that one single experience is as great as possible. But if you used to take the majority of FS businesses, that's not possible. If you take, say, a wealth manager, for example, you might have the website you're thinking of, you have the communication channels, you have perhaps client portals, you have to take into account the offline relationship that would have perhaps with a relationship manager. And from the customer's point of view, these are all customer experience touch points that they have and interact with this organization. And from the brand's perspective, it's okay, they can't just think about designing, you know, an awesome website experience in silo, because from the customer's point of view, that's great, but invariably they interact with, you know, a bunch of different channels. And I suppose, and I know, Sol, you've had, you know, lots of experience with this with you know, various organizations, is, you know, how would you approach that challenge of designing an omni-channel experience? Because there's no point delivering a great website experience, but your app experience is, you know, subpar, because from the customer's point of view, there's going to be a fail.
Yeah, so no good. So and again, I'll try and be brief on this one because I'm just conscious of the time, and I know that you've got some other questions for us.
That's all right.
Yeah, so omnichannel. I mean, again, I'll just come back to that whole bit of early investigation and alignment about what type of organization directionally you know the organization wants to be. So you know, at Vanquis, for example, at some of the other organizations that obviously we know are probably on this call or that we've worked at, you know, there are a plethora of channels, and there is kind of meaningful intent to continue to support those channels. For me, that's become heightened, for example, that whilst we would have double down as app as the primary kind of channel of service, there's something around saying, well, actually, we'll go up a layer and say, well, let's have intelligence as the thing. So this links to my data comment earlier. If you've got intelligent agency, then actually that starts to future-proof you for whatever other technology or channel adaptation there is in the future. So, you know, in the past 5 years, I've been involved in 2 or 3 different proof of concepts around servicing via Internet of Things. So, you know, Google Home, Amazon Alexa, as well as looking at what we as an organization could be doing literally at this moment in time from a servicing perspective on the social media side of things as well. So, you know, in 5 years' time, our Gen Z is going to expect to transact via TikTok or whatever the latest thing will be at that time. Who knows? But certainly social isn't going away. Certainly Internet of Things is very much in its infancy. So if you've got intelligence as one of your primary kind of aspects, then you can then start to delineate and make decisions around, well, okay, you're doubling down on say digital for now over the next 1 to 3 years, but then actually we're going to be mindful of what's coming next, and we're going to trim away from actually you know, contact center. We're going to trim away from web. This last year, I've moved back on some of my previous assumptions around servicing via web channels, only because I've seen some of the behaviors coming out of specifically Apple. If I'm thinking of Google, Apple, Facebook, and Amazon, the big four, and their own encroachment into the financial services space and their own powerful positions in that space. So, you know, I wouldn't be a betting man to assume that it makes sense to have your own web estate, because there are certain things that you probably want to make sure that you can do there and service there for your customers in a way that if there are rule changes to both of the app stores and you're limited in what you can do there, you've at least got that as, dare I say, a fallback position as well. So, you know, some judicious choices need to be made by organizations, but for me, it starts with knowing that data and intelligent agency is at the heart of what then you want to focus on channel-wise. Because, as I say, it's expensive from a cost as well as an efficiency perspective to maintain lots of different channels, which again might not be meaningful for your particular audience size and type.
I think, yeah, and that relationship as well, but with, I guess with existing customers and first party data is also going to be a lot more important, especially after this year with deprecation of third party cookies. The ability to engender trust, to build relationships, stronger relationships with the customers you already have, or even prospect customers that you're marketing to. Having that the quality of first party data is going to be really important. We're running a webinar on this in June, funny enough, and it's not many people are really thinking hard about this at the moment. And if we're talking about omnichannel experiences, the ability to use that first party data across those different channels will be transformed. When customers, at the moment, for example, we work with a client at the moment who's got technology stack across CDP, website, email, social channels. Doesn't have the ability to track across those. First party data is a complete mess. Consent management is a complete mess. You can't link up customers between all those different platforms. So I think that is a massive opportunity for people like us, to be honest, to try and help that data problem, but also for customers to have, our clients to have that data cleaned and able to be supplemented also by publisher data. So I think Vanquis do have close relations with people like Money Supermarket and so on, where those kind of the client base, those cohorts of people they're trying to target, spend a lot of time. Likewise with other clients who have different publisher relationships, those have become more direct, I think. I mean, in terms of methodology as to how Omnichannel can be designed, I mean, we could talk about this all day, I guess, but if I think about our methodology, it's having that data in place, understanding the journeys from each channel, what different types of customers want. You know, a business banking customer is not going to have the same journey as a personal account customer, won't have the same journey as a premium account customer. They'll be looking for different things. Putting the measurement framework around that, understanding what's important to those customers and how that impacts on the marketing objectives, but also the goals that we're measuring as well. What's the impact we're trying to measure there? I think the important part that's often missing is that puzzle of we've got all this stuff, but we don't know how to use it. We've got Eloqua as an email platform. We've got Adobe as our experience platform. We've got Adobe Analytics over here. We've got Geo over here. What do we use for what? And actually auditing all that and understanding what it all does, and then working out what's integrated now, what's simple to integrate, what's going to take a longer time, and the same with data as well. And the data one, I think, is probably the biggest challenge that a lot of clients we speak to have got. It's they don't have control over data themselves. They've only got access to what they got access to. And so if they want to run a campaign, they have to dig around, try and put all this data together manually. It's a really complicated process. And the thought of integrating that is just beyond what the time they have and the sort of skills they have in house to try and evolve. So what we try to do then is to look at what is a chart of value versus effort. So what can be done now? What's a quick win? What's going to require more effort? And what result are we expecting to see? And what's the business case for that? What revenue? How are we going to attribute it? So I think I'm not going to talk too much about differentiating or designing omnichannel experience, but certainly that's the methodology that we will be going through to get to the result that the customer needs.
It's interesting what you just said there, because I think Sol made a point earlier on about FS businesses are at heart data businesses, and there's an inherent challenge in leveraging using data within the context of a financial services business, or a bank or an insurer, because for most digital teams it's either you're never allowed to touch core customer data, or data is held in disparate different systems. So if you just think about, talking about technology and buying technology instead of building it, invariably that means every piece of kit you bought contains a nugget of information around your customer, and invariably that's siloed off. So, I mean, throws over to you, Sol. How are you seeing data feeding into the delivery of customer experiences when it can be quite difficult? There's also, you have to include, ethical use of data, legislation around the use of data, and just businesses' wariness over, how they use customer data, and sometimes the feeling that it's perhaps better just to stay away from it. Actually, perhaps just stick with the status quo, but they're kind of being driven forward to try and leverage that data in a positive way.
Yeah, definitely. So it's a tough one. Again, I'll be brief here. So the last 2 or 3 organizations I've worked in, I've been very struck that, and you guys will know this one, but what gets measured gets done. But then the rub is that a lot of the things that have been measured to date haven't necessarily been the things that you want to focus on. They haven't really been customer centric things, in my view. So one of the things that I've instituted at the last couple of organizations, and again here at Vanquis, is a value framework and a scorecard that keeps us honest. And that basically essentially is a set of metrics that we can rally around to keep us honest, to keep us on point directionally in terms of where we're going. And to Steve's point, what you find is that there's some interesting conversations that start to pop up, because guess what? We don't measure that, or we don't know how to get that, or actually that particular stuff is no one's looked at it for ages, or whatever it might be. And so there's some interesting conversations to say, well, actually, if those metrics that you put together, which in our case here at Vanquis have been accepted as these are the right things to measure, if your North Star is the North Star that you want to go for. So again, at Vanquis, our North Star is the percentage of digital only customers, right? Because we're a bank and they want to be a digital bank rather than just, serving a range of different characteristics as we are currently. So directionally, if you're on point for those things, and if you don't have certain data, or if it's cumbersome to expose that data, then you need to try and break through that. We do have a digital capability and a data capability here at Vanquis, but again, they're both nascent, they're both in their infancy. So, work is ongoing, but starting to mobilize more at pace to actually start to unlock some of those things. And you're right, Mario, in terms of some of the nuanced debates about, exposing customer data. So I've started this last 6 months to really upskill my own knowledge in terms of the ethical side of things, right? Because as Steve alluded to earlier, if we're not careful, there's a looming platform for a lot of, or looming kind of issue for a lot of FS organizations related to how customer data is used, which a lot of organizations are still trying to work through. And it's not one that, again, echoing Steve, skill sets wise, there are a lot of organizations they don't have those skills in house, they don't have that capability in house. So there's going to be a lot of kind of partnership work needed with third party entities to kind of try and help hold organizations by the hand, navigate, etc., as they go forward to kind of do make improvements that they need to.
Okay, Steve, you mentioned just before, and I thought it was quite interesting, around the rollout of marketing technology and how by time an organization's upgraded to the latest iteration of whatever tool they have in place, there's a new version that's come out with new features, and yet they haven't even leveraged the previous iterations features. So Steve, from your perspective, how do you see with businesses investing millions of pounds in new marketing technologies and the rollout of these, how are you seeing these succeeding when some of these technology rollouts can be worked in silo with different teams owning different platforms? You mentioned Adobe AEM and Eloqua. So it'd be interesting to hear your perspective on that, Steve.
I think the answer is relatively simple. I think it has to start with the business need. It has to start with what is it we're trying to do with this customer cohort, or this type of customer. What is it we want to try and do? So often we find that people are buying technology, then they're trying to figure out what to do with it, and it's almost chicken and egg. So they bought this kit and they've got no idea how to use it, and so that's the reason why things like Adobe and Sitecore and Eloqua go, 10 years after implementation, and they're still just using it for simple tasks. So it's starting with the customer, what we're trying to do with the customer and why, and then it's team alignment. And the most successful teams that we see, and this tends to be some of the big banks are doing it. I won't mention the name, but there's a large bank in Canary Wharf that's doing this right now, where you have a marketer in the middle, you have a data person sat next to them, in a sort of philosophical term, if you like, and then you have a tech ops person sat the other side. So the marketer is saying, right, we have a business need where we want to sell a new business banking product, for example. They can say to the data person who has access to all that data that the marketer doesn't need access to, they can say, well, this is the data that supports that customer journey. Here's what they're doing throughout that journey. Here's where they're coming from. And here's the goal where they're getting to. And that can then enable the marketer to make informed decisions about, okay, where am I going to focus my efforts? Where am I going to focus my spends? How am I going to acquire traffic? What's the experience need to look like on the site? And then you've got the tech ops person over here, who is the person that says, right, now I know what you're trying to do and across which channels and so on, I can tell you how to use all your technology to do that. So it comes back to the breadth of capability, and it's not just a marketer who can do this, which has been the sort of traditional thinking that they just give them all the technology, they can just go and do it. It requires quite deep skill sets across those three areas in order to make that successful. So if we're talking about how MarTech rollouts are succeeding, it really all comes down to team alignment, which on itself is predicated on KPI alignments. Sol, how do you see it in your business?
Yeah, so it's exactly what you said. I mean, just to augment very quickly, yeah, that the notion that this is stuff that's just done in silo in one area is absolutely not the way. And it comes, if I layer it up a bit, it's different ways of working. So you're actually now saying, well, you've got cross-functional collaboration basically going on. You don't just have, a marketing person. You've got, like, say, the other roles involved, which is, again, part of a broader organizational change where you're starting to enable sustained changes to how you do delivery. So, business agility, new ways of working, etc., with cross-functional collaboration, product teams, innovation, etc. And, again, just supplementing slightly as well, the era of multi-year rollouts to implement stuff, I think that's done now. I think it just has to be done. So, what we're seeing now are organizations, having, collaborative cross-functional teams, and they're doing iterations, they're doing tests and learns, they're looking for pathfinders or example areas to kind of experiment and test something. So very crude example, we have an early conversation with a third party to do some pilot voice artificial intelligence, which they're just going to look at seeing what they can do with one common frequently asked question area. But, I think our top 5 or 10 frequently asked questions, engender so much of the volume of calls into contact center. So if they can do that as a small pilot over 8-12 weeks, rather than we get into lots of bureaucratic paperwork, sign them up, do some, and that takes 6 months, that's a way of kind of building understanding about that particular thing. And then you kind of grow forward, you grow in confidence, maturity, etc. So looking for pathfinders and exemplars across a range of kind of areas, thinking of ratio specifically, there's a whole mountain of stuff from an acquisition funnel perspective that I'm sure you guys would be able to kind of really leverage on, etc.
I think you used a really, and I know we've sailed well over time now, but you used a really interesting phrase on a podcast that we did that always sticks in my mind, and that is, there's the sort of phrase, what does good look like? And actually, I think you used the phrase, what does good enough look like? Yeah. And it's about those sort of those short, sharp, high impact POCs. Let's establish what we could do, establish what the value of it's going to be before we start plowing more time and resources into it.
And yeah, unfortunately, we're at the top of the hour now. I mean, I've got a million more questions I would like to ask you, but I appreciate everyone who's on today's call has probably other things to do from 12 o'clock, most probably involving lunch. So Sol, thank you for today. And Steve, again, thank you as well. Really interested in both of your comments today.
Thank you very much.
Thanks for having me.
That's all right, a pleasure. And thanks everyone who joined us today's session. Today's session was recorded, so you'll get a link from me in the next probably 24 hours. So thank you and enjoy the rest of the day. So ta-ra.
Cheers. Take care, guys.
Bye-bye.